NIO may not be a recognizable name in the US, but it is becoming a leading player in China's EV market. But the company has had its fair share of problems along the way. Despite setbacks due to the coronavirus pandemic, the company has continued to grow. Today, we will see, can NIO become the Tesla of China? Number 6. NIO Review. NIO has racked up over $6 billion in costs since starting in 2014 and was on the brink of collapse in 2020. But it has managed to turn that around and become the world's fourth most valuable automaker. Despite setbacks due to the coronavirus pandemic, the company has continued to grow. In the third quarter of 2020, it reached $628 million in sales and delivered up to 12,206 vehicles. However, the company still has a long way to go before it can dominate the Chinese auto market. But NIO's cars aren't what makes headlines. Over the course of 2020, its stock price has increased 1,000% to $50, 38 pounds a share, thanks to the $1 billion injection from the Chinese government, part of its bid to become a global green superpower. China has pledged that 25% of car sales by 2025 must be new energy vehicles, not fueled purely by petrol or diesel, creating a huge potential market for NIO. With this rise in share price value, NIO could be seen as making steps in the direction of Tesla. Number 5. Tesla's biggest competitor. There's no doubt that Musk's eccentric style, as well as never-before-seen products like the Cybertruck, have helped to make Tesla the most recognizable electric car maker in the industry. Outside of the United States, however, there are many companies that are quietly setting themselves up to compete with and perhaps even to surpass the quirky entrepreneur at his own game. Tesla and China have been big buzzwords for years, associated as they both are with potentially world-changing innovation and growth. So when a Shanghai-based automotive startup comes along, amid whispers of being China's Tesla, you know it's worth your attention. The company has also developed a reputation for being risky and unpredictable. Some competitors fear that its valuation is based on a vague notion of potential rather than its current financial performance. Although perhaps a similar charge could be made against Tesla itself, NIO delivered 36,000 cars in 2020 so far, representing a 111% sales surge, while it saw its share price climb over 1,000% to date. Number 4. Catching up with Tesla. China is already the world's largest auto market. In its bid to become a leader in electric vehicle technology, Beijing has supported the industry with subsidies, looser restrictions, and the building out of charging infrastructure. Homegrown electric vehicle makers include NIO, Li Auto, and Xpeng said deliveries surged last year. Government data showed sales of pure electric vehicles from January through November jumped 4.4% on year versus a 7.6% drop in overall passenger car sales in the same period. Still, their delivery numbers came short of Tesla's. Clearly, everybody's trying to position against Tesla. Tesla is currently the market leader. It has the market capitalization that's so far ahead of everyone else, Russo said. For its part, Tesla's market value is around $768.93 billion as of Monday, whereas NIO has a market capitalization of about $98.63 billion. NIO is trying to establish themselves as the Chinese Tesla, which means you have to compare yourself as a premium EV brand in China with access to the China market, which stands to grow significantly over the next 5 years. NIO is the latest electric vehicle maker to earn the aspirational label of Tesla Killer. As the fastest growing EV company in China, it has a legitimate shot, given that China is the biggest purchaser of EVs worldwide. Number 3. Advantages NIO has over Tesla. The first innovation is NIO's subscription purchasing model that aims to simplify ownership by taking away the risk of owning the battery part of the vehicle. Instead, you lease it, and if improved batteries are released, you have them fitted in your car. The second difference is NIO's 3-minute battery swap-out service, which is called BAAS, or Battery as a Service. Tesla recommends charging overnight at home for a full charge. However, instead of having to wait for their vehicles to charge, NIO's BAAS customers will be able to swap their empty batteries for fully charged ones within 3 minutes at one of the company's battery swap stations, of which 143 have been built so far. Additionally, those who want to take long-distance trips in the shortest possible time will find a 3-minute swap instead of an hour or more charging time appealing. Number 2. Still, it's time for NIO to become Tesla. Despite these innovations, investors still have reason to be cautious about investing in any electric vehicle company. The automotive industry is transforming itself into something more akin to the tech sector, driven by the move to autonomous cars and battery power. This includes introducing subscription services and ongoing revenue streams instead of just one-off purchases. But the sector is also becoming subject to other trappings of tech, including rapid but rocky growth. Earlier this year, EV firm Nikola Corporation managed to increase its share price sixfold thanks to investment from General Motors, but then saw its stock plunge again. Another issue is that EV manufacturers' initial growth eventually comes up against the automotive industry's key barrier to long-term expansion: mass manufacturing. Unlike tech firms that can reach billions of customers through the internet, large car makers need to manufacture products at enormous scale and rely on huge supply chains. This is what makes the success of Tesla even more improbable. Despite hiccups along the way, the company has not only watched its stocks continue to rise, but is also effectively becoming a tech giant, buying up firms in order to feed its growth. With this in mind, there are clear lessons that NIO can learn from Tesla. There is, of course, battery swapping. When Tesla launches its second car, the Model S sedan, it knew that customers worried about range anxiety. So it offered them an exclusive supercharger network, now with over 20,000 charging stations worldwide. And it offered battery swapping, just like NIO, but the Tesla battery swap program was ended in 2015, just 3 years after starting, due to a lack of interest from customers. So NIO's model may not work out exactly the way it is hoping. And then there are the share prices. Tesla shares were known at one stage as toxic stock because they were seen as risky and volatile. But investors who rode out the rocky patches can now enjoy shares that have grown to thousands of times their original worth. The company has made profit for 5 successive quarters in a row. This shows sustainable growth is possible for an electric vehicle firm. NIO has the backing of the second biggest economy in the world, with enough potential customers in China to never need to expand anywhere else. So if the company can make its business model work and overcome the manufacturing challenge, then it could show its recent share surge is more than just volatile hype for a shiny new tech firm. Number 1. NIO is not the market leader. Through the first half of 2020, Tesla had a market share of more than 20% in China, and it has sold 50,000 vehicles there over the past year. As you can see, NIO does not have the first mover advantage in China, and its cash shortfall earlier this year greatly curtailed its ability to grow its operations and maintain its marketing activities. Further, even if NIO later became the top EV maker in China, it will face brutal competition. As it stands, Tesla, the sector's current leader, sells less than 1 out of every 4 EVs bought in China. That shows just how many EV brands are already competing in the nation. NIO, similarly, is still at the early stages of development and supposedly has a huge runway ahead of it. Tesla stock would go on to jump 50-fold between 2013 and today. Obviously, if NIO stock does anything like that, it would be a sensational investment. Do let us know in the comment, do you think NIO can beat Tesla in China? Please subscribe to the Stock Advisor. Thanks for watching.